Why are credit limits important for future major loans? Imagine trying to buy a house or a car and wondering if your credit will support the loan. Your credit limit plays a big role in shaping that future. When you use a credit card, the amount you can spend is your credit limit. This limit affects your credit utilization ratio, which is how much of your available credit you are using at any time. Lenders look at this ratio to see if you manage your credit well. If you keep your balances low, usually below 30% of your credit limit, it shows you are responsible with credit. For students just starting out, credit limits are often small because they have little or no credit history. A typical student credit card might have a limit of $500 to $1,000. Using this card for small purchases like groceries or textbooks and paying the bill on time helps build a positive record. Making payments on time is key because it shows lenders you can handle debt responsibly. As you prove your good habits, you can ask for a higher credit limit. This can help lower your credit utilization ratio, which is good for your credit score. Having a higher credit limit means you can spend more without hurting your credit score. For example, if your limit is $1,000 and you use only $200, your utilization is 20%. But if your limit increases to $2,000 and you still spend only $200, your utilization drops to 10%. This lower ratio can boost your credit score, making it easier to qualify for big loans later. When you apply for a major loan like a mortgage or a student loan, lenders check your credit report and score. They want to see that you can handle larger amounts of money. A good credit score, which is helped by responsible credit limit management, shows you are trustworthy. It can also lead to better loan terms, like lower interest rates and higher borrowing amounts. In short, credit limits matter because they influence your credit utilization ratio and your credit score. A strong score helps you qualify for major loans with better terms. Managing your credit limits wisely by not maxing out your cards and paying on time builds habits lenders value. Over time, increasing your credit limit responsibly can improve your credit profile. For students, this means setting a solid foundation for future financial goals, making it easier to get the big loans you might need down the road.